Hello, welcome to this episode of Rich Insights. I'm Don Rich, the head of investments for Esoterica Capital Markets. Today's topic is examining how vibrant the economy is, right? We want to get a measure of the pulse of Main Street, if you will, the real economy, the private sector. All right, and to do that, I'm going to discuss an economic term here. All right, it's called the velocity of money. Now, don't stop the video. I'm going to walk you through it. It's actually a very simple and intuitive concept. All right, so let's go to the charts here. And the first thing I want to do is come down here to the box. Forget about the chart for the time being. Let's talk about what it is. The velocity of money is how often a dollar bill in society changes hands. All right, the number of times it changes hands. The more times it changes hands, the more vibrant the economy. All right, so again, an example might be you pay somebody to mow your yard, and that person then takes the money and they buy a cup of coffee, and that person at the coffee store then goes out and watches a movie that night, and eventually somebody ends up buying a new smartphone, blah, 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 right? It's just that same dollar or collection of dollars changing hands within the quarter, right? We always measure this turnover rate. It's really a turnover rate of that dollar within the quarter. Okay, so let's go back and look at this. So this is the velocity of what's called M2 money. Now, a precise definition of M2 money is down here in the footnote. All you need to know is M2 money is anything that's actually money today or can quickly be converted into spending dollars today. Okay, now again, for the last 25 years or so, this has been a one-way train. All right, we have had occasional peaks, but notice the valleys are much deeper and longer. All right, the last run-up we had there was in 2010, and just recently, but we're headed south again. Okay, so why is this important? Again, for two reasons. One is the vibrancy of Main Street just is not there. I'm going to show you another chart here in a couple of weeks. Next time we get the GDP number. And it's a direct measure of Wall Street versus Main Street, right? And to show you the relative difference. And that discrepancy is now the largest in history. The largest we've ever had. So we went through this bull market, right? The longest bull market in history. But Main Street has not kept up, right? Our GDP numbers are not mind-boggling like our equity investment returns were during the bull market, right? And that discrepancy just kept building and building and building. All right, now that is concerning because it makes you think that there might be something wrong with the valuations. That the valuations that are driving the investment returns are just getting nuts, right? They're going too high. Okay, so let's go back to the charts. Now, the second thing this shows us is inflation related. If this dollar bill that we're chasing through the economy is not changing hands, then it's hard to get inflation. It's very unlikely that we can have sustained inflation without that dollar bill just continuing to turn. Now, recently our interest rates have fallen, so they're much more in line with Europe and Japan. And next, we're going to see our inflation also fall, like it is in Europe and in Japan. The word we're going to start hearing a lot about going forward is deflation, not inflation. Right, we're not going to be worried about inflation. We're going to be worried about deflation. That's going to be a major concern going forward. All right, so that's our message for today. I'm Don Rich. You just experienced a rich insight. I hope you've enjoyed it. May your beer be colder than the company you keep. We'll talk again soon. Thank you.